Okay.
Oh, is there a presenter? I'll make you the presenter.
Okay.
It's not letting me make him presenter. Can somebody else make him presenter?
Make a who presenter?
John. Okay, I'll make myself presenter. John, you're just going to see my screen.
Okay. All right. Okay, now it's done for me.
Okay.
Okay. Let me just change this over to this and change this to slideshow.
Tell me when you're ready. Are you ready?
I'm ready. Yeah.
Okay. Oh, we don't have any attendees.
Oh, we don't.
That's weird. Okay, I guess go for it.
Are we started yet? It says start webinar on my thing up here. It says in practice mode.
Oh, it does? Okay.
The broadcast is now starting. All attendees are in listen-only mode.
Welcome members and guests to the monthly meeting of the International Model Investment Club. We're a Better Investing online chapter, and on this page you can see our YouTube channel URL, tinyurl.com/YouTube BICS, our Facebook page, and our Better Investing page. Move on.
I don't see anything on screen.
Oh.
Oh, you don't? Okay, you know what, John? Maybe let me make myself the presenter.
Okay.
I'm seeing it.
Oh, you are
saw
seeing
it.
it?
Yeah.
Is it still there?
No, now you took it.
Oh.
Go ahead, John can carry on.
Oh, sorry.
Okay.
It's okay. You can go ahead and present. Joanne. John can keep talking.
Oh, I'm sorry, John. I'm going to make you, because actually I wasn't ready to.
Okay, sure. No
up.
problem.
Okay.
Okay, so here's some of our background. We were founded in May 2016, and we're a Better Investing Model Club open to the public. We have monthly meetings, as I said earlier, and we meet on the third Monday of each month. In December, we meet on the second Monday of the month due to the holidays. We use hypothetical money to avoid issues with currency exchanges and taxes because we have members outside of the United States, China and Canada and other countries perhaps. Primary role is to be a learning lab to learn better investing principles and the fundamentals of stock investment using the online stock selection guide, and to learn investment club operations management. If you're a guest, you'll see the stock selection guide a couple times tonight. So, and all meetings are held online for visitors and guests from around the world. And the international community, we currently have 12 members in the United States, Canada, and China. Okay. You'll see a control panel. I'm sure you've already seen it, but here's the meeting conduct. The agenda is available in the handout section of the control panel towards the bottom. All visitors, guests will be muted during the meeting and may post questions in the questions section. At the end of the stock presentations, visitors and guests will be unmuted and ask for their comments and questions. Meeting segments are timed. Alerts will signal when a segment is near the end and when finished. I believe one of our members will just state, when it's near the end and when it's finished. Okay, and here's our disclaimer. The information presented is for educational purposes only. It is not intended as a recommendation to buy or sell the securities mentioned. The views expressed are those of the participants only, do not necessarily represent those of Better Investing. Investors should conduct their own research and analysis before making any investment decisions. Securities discussed may be held by presenters in their own portfolios. Presentation may contain images of websites, products, services not endorsed by Better Investing or the presenters. This meeting is recorded and will be posted to our YouTube channel. And I believe that's our introductory material. So I'm gonna exit from this and go to our agenda for this evening. We are, I just covered the introduction disclaimer, and we're going to do the agenda review right now. Reddy, our treasurer, is going to do a treasury report for 10 minutes or less, and then Jay will have a education topic on how can you be sure by Cy Lynch for 10 minutes or less. We'll have a stock study this month in October on auto auctions, and myself, Annie, and Joel will present on that. And we have open mic for guest questions and comments, and then club business at 7:15 Pacific time. Hanny has rejoined our club. He was a past president, past treasurer of our club, and he's back tonight. This is his first meeting back, so welcome back, Hanny. And he'll be doing an industry study for auto auctions. So now I would like to someone to switch the presentation capabilities to Reddy for the treasury report.
I can do that. Ready? You have to
Thanks.
unmute yourself.
Okay, I did.
Okay, I'm making you presenter. Do you,
Okay, I'm on.
yes.
Okay, this month's treasury report is simpler because we don't have any buy or sell transactions. I'll go through it quickly. Here is the update. I deposited $1,200 because somebody has to add Haney's name to the list. Then I will add another $100 more. So 1,200 deposited last night. There is a okay. We did not buy any new stocks last month. We did not sell any. We did not pay out any, no payouts. Bernie's calls is completely paid out the month before because we had enough balance. So after this month's deposit, including $1,200 shown above, we have 3,200 plus balance as of today. So we can buy something if we are like Copart or some other stock. Heat map shows something like this one with still the vertex is the biggest chunk in our club. We have, I think, 1, 4, 5, 6, 7. We have 13 stocks. Next one is I listed the winners and losers for this month report. Schwab and Vertex are have good profit, but others are losing just because it's a market situation is bad. Google, LGI Homes, Amazon, and First American, we lost as much as anywhere between 26% to 43%. But that's the market situation. This is the overall portfolio gain or loss to date. All the club stocks, you can see that only 3 of them are doing good and others are in the red. But that's all because of the market situation again. I'm sure you're all listening to financial news. The club performance, yes, this year is doing bad. But again, that's only this year. The last few years we have been doing good. On 1 year basis, we did good, but 2022, not that good. These show basically this same information from the club. The company assets, Vertex is shown largest. These are all the companies that we have. And brokers percentage is about 6.2. We can buy some company if you like it. The club diversification is fairly good. It's we can invest this cash again in some smaller large cap stocks. I think the sectors missing are still there are 3 of them. Otherwise, we have covered 8 sectors, pretty good. And diversification is shown here. We have a little larger sec in biotech, but it's a fairly diversified as of today. So any questions, I'll be glad to answer. I think last executive committee meeting, we did discuss fairly at length. I think once in a while you should do PERT analysis and at least quarterly. That is a decision of the executive committee last week.
Okay, thank you, Reddy. Did we remove Matt Claiborne's contribution? What did we decide?
Yeah.
We did? We paid Matt out?
We paid Matt out. 1 second.
I don't think we did.
I don't think we did.
No, we did not do that. He has a large part.
Okay, so let's save that for
Yeah,
club.
but I thought John, you will check with him, see if he wants to drop out before we do that, right?
I was going to do that. I don't.
I thought
No, John during the executive committee said that.
Mina is going to. Mina was going to.
Yeah.
Okay.
Yeah, I just want to drop him off, but because he hasn't been coming to meetings. But we can talk about that at Club Business. We can move on to Jay's portion now. Jay, do you want to take the screen?
Yes. Today's education topic, I mainly just want to summarize Cy Lynch, Stock Made Easy. He presented actually back in 2021. I included the recording and slides in my PowerPoint. I just want to highlight a few things that I learned from that presentation. There are much more information into it. I recommend you to watch it or to read it. Even read the slides that may not make much sense to you, but I recommend you to listen to it. And that the objectives is basically we want to using preferred procedures projected earning per share, right? Using preferred procedure and based on the PEs, the dividends to come up annualize the returns. So a couple of things that I learned from him is that the preferred procedure basically is the expected income statement. As you can see, oh, sorry, let me make a full screen. It is the reason why we want to use preferred procedures because basically the information is from the income statements, as you can see the right-hand side. And then we are come up our own judgments in 4 areas, right? Because we initially, the first page, you project the sales, and then we will need to project the pre-tax profit, taxes, and outstanding shares. So I will show you next 4 or 5 slides that how Cy Lynch did it. I took over, I used his method. So he used value line as a source for tax rate. For next 3 years, the tax rate is 24%. And then he calculated pre-tax profit margin by using value line projected net profit divided by value line projected tax rate, 1 minus projected tax rate. That gives you the equations to give you the projected pre-tax profit margin using the next 3 years of the data to project that. Then he also using value line second opinion to project the diluted shares. He specifically mentioned in his PowerPoint that in his webinar saying that don't use this common share outstanding, even though in this case that it calculated the same shares, 239 shares. I forgot why he said don't use that. But anyway, using projected net profit divided by projected earning per share, that's how it give you the projected diluted shares. Maybe these uncommon shares are not diluted. In this instance, that even though it give you the same number of shares. And then he used value line to project the growth. So by the way, this company actually is a Copart. So I'm just using this example later on. Huel also will give his projection reasoning, but I just want to show you how I use the value line to come up with it. As we know how to calculate annual growth rate, because you can use just Google the. I just Googled that it's a calculation page, gave you the start value and end value. For the start value that I used the 2022, for ending, I'm using 25 to 27. 25 to 27 in 3 years, I'm using 22. So 4 years, that give you the annual growth rate is 2.74. You can also using a compound annual growth rate formula to do the on your calculator, it will give you about the same 2.7. So there's my last slide. I want to show you that there is a webinar by Avi talking about preferred procedure simplified by Avi. Has more detailed information. I recommend us so you to watch it and to figure out how does that work for preferred procedure. So these are my summary from Cy Lynch's PowerPoint. Any questions?
Shouldn't it be 5 years? 22 to 27?
So 25 to 27, 3 years.
You have 4.
Right, and then 22. I thought about that, Megumi, too. And I was like, but I'm not sure if
that's very simple. 22 to 23, 4, 5, 6. 6 is the middle of 25, 27. That's why it's 4.
Say that again?
22 to 23 is 1.
Yeah.
23 to 4, 4 to 5, 5 to 6.
Oh,
But it's
that's
to
how you
7.
calculate it. Okay. I was wondering if it's 22 is 1 and then 25 to 27 3. So that gave you 4. Not worry about 2023 because
Yeah,
not compound.
Projection is for the years 25 to 27. We take in the middle, which is 26, year 26. So
Okay.
22 to 26 is 4.
Okay. Oops, sorry. Yeah. Okay. So I have been using this to calculate my other projections to override the preferred procedure. That's how I've been doing for a
Oh,
couple of years.
is Avi's different?
Avi's just to tell you that how does preferred procedure work.
Oh, okay.
He has something like this. Which line lights what does that mean? So
What is the abbreviation AVI? I forgot.
Avi is a name, a person.
Avi's person.
Oh, Avi is a person.
Horowitz.
Actually, he's a CPA. I'm going to invite him to be our guest to visit us. He's located in New York. He's a CPA.
So can you go back? So what values are you substituting or replacing in the preferred procedure for
All
with
of
your
them.
all of them? Okay.
Based on Cy Lynch's calculations?
Yes.
Okay.
I don't see where. Can you go back? Where do you get the 3 from? The 42.3? Can you?
Oh,
just,
3 is the sales. The 3
Okay.
sales is the front page from SSG. You know that is.
Yeah, that's
Okay.
fine.
Yeah, that's fine, right? And then and then pre-tax profit is here. Pre-tax profit
Okay.
using the tax rate because the tax rate is 24%.
Okay.
Yeah, but Joe, why do we have to do this? It's already available.
What do you mean? What's available? Where?
In the preferred procedure?
No.
Pre-tax
You have
income.
Like which values did you change? That if
I'm
you just
changing
open,
the judgments. I'm overriding the judgments.
well, okay. Well, like the sales you have to put in anyway, right?
Well, this,
Yeah, the sales is that's a different, right? That is not from income statement.
and usually
Right.
the sales is pre-filled from your first page judgment.
Yes. Yes.
Right. So I guess my question is, so say you put in 3%, then which fields are default and which ones are you changing? So you're saying you changed the 42.3 based on that calculation,
Yes.
and taxes,
Yes.
that's also from value line. And then, and the
Yes.
share is outstanding. Okay.
Yes.
All right.
Yes. I'm basically calculating the earning per share using preferred procedure, right? That's what we are
Okay.
trying to do. Yeah. So that's what I understood. I actually sent an email to Cy Lynch. I make sure I understand. That's why I say, hey, recommend you. He has more. He even talk about analysts. He has more information in his slide, and but it's so much. He talk about SSG.
So why does he recommend that we do this instead of just taking the value given in the preferred procedure?
It's just using value line as a second opinion.
Okay.
As a second opinion. So that's why it's called why are you so how can you be sure? You know.
Yeah, but
So
we have to have a good
confirming.
idea. We have to have a good idea of those assumptions.
Yeah. So you
Okay, we got
can
about 1
also
minute
looking
left.
at your. That's
Okay.
why he also said in his presentation looking at the projections to compare with other analysts, right? And so he also talked about using value line. That's what I started using his second opinion.
Value line is usually just one analyst following
Yes.
a company. So it's a good idea to use other analyst estimates for earnings per share because you get a bit of a range, and you can see how things change if you use different values in that range.
Right. He did mention that he did mention that using Yahoo or whoever is, or even Manifest or that. So I'm just using the second opinion as to like one analyst, one way of for me to come up with that judgment, come up with the, replace those judgments. But then I always right now my time spent so much right now, I really want to focus on a company itself, how they do rather than what analysts say. And based on the more read, I just feel like I don't know. I'm not sure if I can trust all these analysts. So I just want to come up with my own judgments that learning to look at a company's financials, company's guidance that give me some confidence how company's doing.
1 minute.
Okay.
One minute till stock study.
Oh,
Okay.
Thanks, Jay.
Yeah, you're welcome. John, you have something to add?
no, I don't. I was just,
Okay.
I don't. No.
Okay.
Thank you, though.
You're
That's
welcome.
good.
Okay.
Do you,
All right. I'm done.
is Hanny?
So hand it to Henny. Henny, I'm making
Sure.
a presenter to.
I don't have
The
the
presentation.
presentation. Yeah, if someone could put that up, I'd appreciate it.
Oh, I have up. Okay, so sure, I can't present.
Dealing with a really bad cold, so I apologize in advance if I start coughing a lot.
Okay. Yeah, I can tell by your voice. Okay.
Okay, so just very quickly, we'll talk about how we pick this sector. I'll do a quick industry review, and then Joelle and John will do the stock studies. So to be honest, we did a screen and then just decided to go with Copart because we had a lot of information that was already available. So we'll deal with that. So this is a little bit tricky because a lot of the information available relates to the new automotive car market and or the used car market in North America. There's not, and the industry that we're dealing with is online auctions of vehicles. So it's a kind of a sub sector of or sub industry of the used car market. And historically, that market has been dominated by three companies: Cox Automotive, which is Mannheim. Mannheim is an online auction app. Copart, IAA, and KAR. There are a number of new competitors that are coming online, especially with people developing new apps, and so it's a lot easier to enter the market, and because there's also new technology, the new apps, they're offering lower fees, and they're able to sell the vehicles more quickly. So there are a number of new entrants that are challenging these historic sort of dominant players. So online auctions became very popular, especially with COVID, and with the introduction of certain inspections that have to take place, certain regulations that when cars are presented online, the seller has to disclose certain information. There's vehicle history reports and so on, and a lot of these online auctions are offering guarantees if something doesn't turn out as it's advertised, and also because of the availability 24/7 of the buying process. You can buy in an auction, or you can put in a recommended price. You could do that at any time. So there's a huge convenience factor. People don't have to actually leave their house and go. And then there's a larger geographic area, so you can see cars from all over North America. Okay, next slide. So the market forecast, I'll talk a little bit about just what happened in the market because of COVID, but the used car market is about twice the size of the new car market. And the new car market has been impacted in the last couple of years by lockdowns in China, supply chain disruptions, chip shortage. All of that has reduced the number of cars produced. So large automotive manufacturers have been cutting production because they couldn't get parts, or workers were locked out, or what have you, and that has caused the price to increase, and that also had an effect on the used car market. So people were going to look at used cars because they couldn't get new cars in a timely fashion, and so again the price of used cars went up quite a bit. There's a big international demand for used vehicles from the United States. A lot of them end up in the Middle East, in Europe, and so on. But still, the U.S. is the largest market, with about 40% of the total international market. So sorry, if we could go back just one second. We're still gonna, I think, see shortages going forward. However, because of the recession and interest rates going up, that's causing quite a drop in demand. And so even though there are not a lot of new cars being produced yet, the chip shortage is easing, but again, the demand is now much lower. So there's going to be a challenging sort of sales environment going forward, and both in the new and the used car market. So okay, next slide. This slide is taken from I believe Cox Automotive. They do a quarterly report, and you could see that used vehicle sales in red, that's for 2022, are much lower than the previous years, and they're projected to go down even further. So minus 11% from 2021. Okay, next slide. Even though the sales are dropping, but pricing has gone up again because of it's kind of two different effects that are working against each other. But because of the shortages, the price is going up because of inflation. So there's even though demand is falling, the price of new vehicles and used vehicles is going up. Next slide. This is kind of gives you a really good view of what's happening and how it impacts sort of the average person. So you can see September 2019 at the bottom of the blue bar is the price of a vehicle, of a used vehicle, the average price in the United States, 21,000 roughly, and the monthly payment is $387 per month. The interest rate was 12.57, and you can see the interest rate and the prices going up. The price has gone down a little bit in 2022 relative to December versus September, a small drop. But because of interest rates, your monthly payment has gone up from 551 to 567. Those are just all averages. So that's a huge increase, and that's as we get more into even higher interest rates, I think it's going to have a very negative effect on sales. And I think that's the last slide. Yep. So going forward, it's not projected that sales will be increasing until we get through the recession and interest rates start dropping. So this is going to be a challenging environment for any of the companies that are in this sector. Okay, that's the industry report.
Okay, thank you. Well, do you want to present your screen?
Sure.
Okay, make you presenter.
Give me a presenter.
Yeah.
Are you able to see my screen?
Yes, you can make a slideshow. Yeah, so you can see bigger. Okay, thank you.
Okay, this is Copart. Copart is one of the leading providers for online auction and vehicle remarketing. It provides a platform for buyers and sellers to sell or dispose of vehicles, both to domestic and international buyers. It considers itself a critical enabler for the global reuse and recycling of vehicles and also raw materials, raw parts, scrap. It has operations in U.S. and in various other parts of the world as well. U.S. and Canada and United Kingdom is the higher ones, the bigger ones. On the left side are the sellers. Copart is in the middle, plays a middleman. It is an auction-based, provides a platform for the sellers on the left, mainly insurance companies. Insurance companies provide roughly 75% of the volume of vehicles, and the rest are by the other ones, by banks, charities, dealers, and the like. The buyers on the right-hand side are repair licensees, exporters to overseas, used car vehicle dealers, manufacturers, dismantlers, and rebuilders, and the like. Here's a screenshot of the competitors that Copart is a part of. On the bottom is the Copart. The bottom is the violet, deep violet. So it shows that it's roughly 37%. I don't see part of my screen here, but okay. So the bottom part is Copart. The up above lilac is IAA. And the one up above that is KAR, CAR. Now, CAR has sold their auction services to Carvana. And also ACV is the upper right, very top right. It has less than 3 years of existence. So it has a very small market share. Here's a screenshot of how Copart has done in the last number of years. On the right-hand side, on the 3, 5, and 10, 15 years on the blue, you'll see that it has exceeded the industry and its index of what it's part of, with the exception of the last year or so. It has not done quite as well, but for the most part, it's done exceedingly well the last number of years. Here's a screenshot also from Ron Brunion's. He did a pretty detailed presentation on Copart, I think a month or two back. And here's it's included in the blue is a link to his presentation, but or you can see that the revenue, income, operating income, all are upward trends. Expenses as well are going up, but it has all going up in the right direction. Here I'll cut out to the SSG and first cut. So again, it provides Copart provides it's an auction for remarketing vehicles. It provides a platform to dispose of these vehicles, and the big chunk, 77%, comes from insurance companies, and again, it sells to the dismantlers, rebuilders, and the like. Copart consists of roughly, it's got 750,000 members. You become a member, and then you're allowed to bid on a vehicle up to 1,200. And if you want to bid for a higher price vehicle, you got to put in some deposits. The application, the website actually has over 250,000 vehicles available online every day, and has sold roughly 3 million cars per year. Again, their cars are either totaled or damaged or recovered as stolen vehicles. The other part, Copart has also purchases a number of storage locations, and it positions itself for catastrophic storm-prone areas. So it operates roughly 16,000 acres of land worldwide, and owns roughly 90% of that land. And last year, it's invested about $2 billion in land acquisitions. Copart operates in over 200 locations in over 11 countries. And it also offers in different languages as well in its application. Here, the ownership also is significant at 11%. CEO owns 4, and the chairman owns 7. I think that's also important to mention. Here are I'll cut out to my SSG. For the last 10 years, it's got 14%, 25% earnings per share, steadily increasing as the years go by. in the last 5 years, it's also been even better actually on each category. Revenue, it makes money by a percentage of the vehicles that are sold. There, it charges fees on auction-related items like listings, title processing, the biddings, remarketing a vehicle, storage and delivery of vehicles from the lots. The main markets, again, is North American and British Isles. There's a number of factors that impact revenue. The market demand for vehicles, drivable vehicles, rebuildable vehicles, the market for used car pricing, and recycled and refurbished parts as well. Of course, the dollar exchange rate has an impact. The debt to ratio is also pretty low, and it's been decreasing steadily for the last 5 years. Right, currently it's 2.5%. In the last 9 months, according to Value Line, revenue has increased 35% year over year, earnings percent 25% year over year. The online auction percentage on consigned vehicles, the service revenue accounts for 80% of those gains. And the other part is Copart also purchases, instead of also being the middleman, it also purchases vehicles and remarkets those and resells them and pockets the difference. So that's an area that's growing also 75% year over year. My sales estimate, I put 4%. And let me see. And I basically based it on Value Line's revenue of 3,900 of this value. Let me see. That revenue, a 5-year estimate was 3,900 million, and using a 4%, that's even more that's higher than Value Line estimates as the volume in 5 years. So I gave it a little bit more more positive, more optimistic percentage. Again, the sales growth for the last 5 years is 17.4, and analysts gave it a 5.1 estimate as well. So again, I chose my estimates to be fairly close to Value Line. I'm fairly conservative, maybe too conservative, but you'll ask me that towards the end. Revenue growth. Towards the beginning of March 2020, of course, that's when the pandemic started, and people were told to hunker in place. Therefore, vehicles were not driven as much, and so there was a decline there was a dramatic volume of dramatic decline in the number of cars that were processed by the auctioneers. Since then, there's been an increase in revenue per car per auction, primarily driven, as Hani mentioned, the scarcity of new vehicles due to the global supply chain disruptions on car parts, and also because of an increase in the volume of cars resulting from higher miles being driven now, because the economy has reopened. A side remark or side point is that on supply chain issues, disruptions, there's a new car contains roughly 30,000 parts that needs to be supplied by third-party suppliers. So, and coordinating that has been an issue. People again are driving their cars for more years, And also, the total loss collisions has been on an upward trend as well. The average used car has been roughly 11 years and that was in 2011, and is now, let me see, and it has increased up 12% to 12, so about a year plus, yeah, in Q1 of 22. So it's up. The average age has crept up 12%. Also, total losses have been on an upward trend. In 2013, they were 14.1%, and it's crept up to 18 as of Q1 of first quarter of 2022. Now, a kind of an interesting twist is kind of going down. Let me see, Q2, from last year, 2021 to 2022. It's going down, and namely because new vehicles have been hard to get, and so people are keeping their, even though they've perhaps gotten into a collision, the prices of used cars had gone up, and so they're not totaling that vehicle quite as often. So that's, but I think the trend will continue to go up. Continue to follow this trend. According to Kaveen Investments, revenue growth is primarily the U.S. growing at 13.6% versus the international at 9.9%. Scrap metal also is forecasted to grow at 5%. And Copart, I don't know if I mentioned this already, but it owns 38% of its market share of the market. It has a wide moat due to its online presence, and also it's essentially a duopoly in two areas, in the sale of vehicles and also in the scrap, and it maintains that high moat because of environmental regulations. It's a high entry point to get into, as Henny mentioned, because of environmental regulations that have to be met. The other point is, 75% of cars are sold through the auctions, through insurance companies, and Copart feels that the other 0.25% can be grown as well. Competition. The sales industry is highly competitive, and it faces a number of competition issues. The three largest auctioneers, again, are IAA, CAR, and these other ones. The dismantlers, the largest ones are LKQ and American Recycler Group. Risks. Near term, there are headwinds as demands for used cars are weakening, and wholesale prices start to decline. There's dismantlers may purchase vehicles straight out directly from insurance companies instead of going through Copart or auctioneers. And also the absence of long-term contractual commitments between Copart and the sellers poses a significant risk. In overseas, they have a particular they prefer companies like Copart to purchase the vehicle instead of being a vehicle co-sign. So it represents a different environment in other countries, namely UK and Germany, I believe. Another risk that I saw was in 2021, the US, the FTC allowed third-party product repair to create parts. In other words, non-OEM manufacturers can produce parts as well. So that unlocks and accommodates repair in design, info, and tools. So it makes it so that other parties can compete with repairing a vehicle. Let me see, vehicle value line states that the vehicle demand is slowing a bit, but still at a very healthy rate for auto retailers to maintain their hefty profits. Okay, sales growth. Here are my estimates. And these are the other analysts. They are estimating considerably higher, Kaveen at 14.4 and Yahoo at 22. Earnings per share. So with earnings per share, I typically peg this to be no higher than my, I just pegged it to be no higher than the sales growth rate, since sales on the long run follow, earnings per share typically follows sales. Let me see. So, all right, earnings per share is at 5. I put it at 4. My high PE, the average high PE is 35.3. The average is 27. I ended up taking the average of these two to make it a 32, and probably that is not, but that is not how it's. But the reason I chose that, I typically on companies, PEs are usually pretty high, and I try to err on the side of being a little bit more conservative. On the SSG, they are roughly on the 35, 30, so it hasn't really dipped that much. So I could have used a 35 here, but okay. The low price, my low price, I typically select 80% of the value of the price, rather. So the current price as of Friday, last Friday, was 107.84. Right now, today is at 110.92. So it's gone up $3. But I've taken 80% and put that as my low price. So it's at a buy. It's at those figures, it's at a 3.2 to 1 ratio, upside downside ratio. Let me see, and then so the projected compound rate at 5.9 here, 5.9 compound annual using the average, and the high is at 10.3. These will probably be discussed later on the slide, but these are Buckle's financial ratios, and for the most part, they passed with the exception of these two, and this one is pretty close actually. So all of them are passed, and we'll cover that later. So it's at a buy, but I kind of said, well, maybe we should watch it. And the reason I say I could have used probably a 5% instead of being so conservative. So that's one area that the SSG could have been adjusted. The other aspect is that it's a mid-sized company. It's $3.5 billion in revenue, and BetterInvesting suggests looking for a company that's got a potential growth from 7 to 15% growth. So that is the essence of my study. Where did I go? So in bottom line, or in summary, Copart seems to be a very, it's got 38% of market share, and it's competitive. It's supported by the number of locations, scrap yard that it's got located, and it's the highest among its competitors. It's got solid profitability compared to its competitors, high margins as well, and I think leadership has shown that it's been able to navigate through its areas, through its competition through the various years. So that's my take. Questions?
Thank you, Al. That was great. Awesome.
Yeah, thank you. So I guess if we were to buy this company, how does that affect our overall portfolio? Given that I think our mid-sized companies is where we're sort of, do we have enough mid-sized companies, and aren't we shooting for a 15% return? So somehow we're going to have to try to make that up elsewhere. But I think your sales projection is pretty low. Your revenue projection based on analysts. I mean, the 5-year out for the value line's 2 years, but the 5-year out we're like in the teens, I think. But maybe like Jay does, you do your own analysis. So like Yahoo's at 22%. Kaveen's is at 14.4 for 5 years out.
Yes.
You picked 4. That's like lower than all of them.
Yeah. Now again, I based it on Value Line's projection for 5 years in revenue.
Oh, based on the revenue, not their growth. Well,
So that's a sales growth.
Wait.
Calculated.
Do you have that?
Calculated himself.
What did you say, John?
Well, calculated himself based on
he
the estimates.
did he calculate it on the Cy Lynch method?
No, he didn't.
Oh.
He's saying that Value Line using 3,900, right? So you know how when you go to SSG, when you go to SSG, you know how the analysts will give you, go to SSG, the first page. Next to 4259, did you see that 5 years estimate? That's why.
I see.
He's saying that he's above that already. So this company, 10 years is a 14%, 5 years was what? I forgot, 17 or 24 for the sales. So they have a very strong growth the last 5 years. It seems a little bit low, but as Henny also saying about this industry, the interest rate going up, it's hard to say. But fundamentally, this company's graph looks just beautiful, and the financials all look amazing. The debts also went down, like 2020, like less than 3%. So if it's not even by, but the market is going to coming down, and this is something that we can definitely get a discounted price when it's on sale. We can get it. If we don't get it now, I think it's a good company to watch for.
Yeah, I think I agree. Like, it's a good company for sure. I think it's still a little bit overpriced when you look at the PE, and if you look at kind of where the market is right now, everything is getting reevaluated because of the higher interest rates. So if you do a compound cash, like a projected cash flow, it's probably a little bit overpriced. So, but it's a good company for sure. I just think that you could probably get it at a lower price, maybe down the road.
Yeah. Today's 110. Actually, the price still went up. Another thing is for this company, you know how those IT companies PEs like a crazy, but this one at least is at the 32 to 35, 2021 38 week. It's pretty consistent. Actually, the the
Yep.
PEs.
I'm not sure what the overall market PE is right now. I thought I heard it was, or saw somewhere it was like around 19 or 20
Overall market?
overall market. Yeah, I can't remember, but it would be good to kind of look at the PE of Copart relative to the PE of the overall S&P 500.
Okay, we need to give John finish up his presentation. John, are you there?
Okay, do I need
Okay.
to relinquish control or can somebody take over?
Yeah,
I have a couple of quick questions.
Mm-hmm.
that's fine. We'll have time, I think. Yeah.
Well, did you look at the SSG with the slightly higher growth rates? Your growth rates are too conservative.
Well, I did. It bounced. I can do that. I can do that now, I suppose.
Okay, then you are comfortably within the buy range. My second question is, this car auction companies have come up very good last couple of years during the COVID, but how do these compare with the companies like CarMax, CarMart? Okay.
Well, okay. This is Valley Lines. Are you still able to see my screen? Yes, right?
Yes.
This is the Valley Line for Copart.
Yeah,
This is cars. Now, car was sold. The auction services was sold to Carvana. So this is car. It doesn't look very good. This is Carvana.
this doesn't.
Also, Valley Line says it'll take a while for them to recover.
Yeah, but the COVID is kind of under control. How does it affect these companies? These companies came up good last 2 years because of the COVID situation.
So your question is how, now that the COVID is under control, how does it affect Copart?
How does it affect companies like Copart and Carvana and KAR?
Well, according to Copart, even though the volume of cars or the price of the cars will probably reduce in price, but the volume will likely continue. In other words, they'll still continue making money one way or another, either by volume or by price. So yes, supply is supply of cars that are being auctioned is an issue, and I think that'll continue, specifically also in overseas markets, because overseas markets are paying a higher price for these cars because they have less regulations than the U.S. and Europe. So they're buying cars and they don't really have those regulations in place to make it so they can afford to buy cars at a little bit higher price than other markets. So I think Valley Line says the trend will continue. Let me see, is this Carvana? Yeah, this is Carvana.
Yeah, my second question is companies with some showroom, but you mainly used cars like CarMax doing good until this month or last month, but their projection is also going to be lower. That's why CarMax dropped. How do these pure auction companies like this one compare with used car sales companies like CarMax?
Okay, can you repeat the question?
How does company like Copart compare with
Yes.
CarMax?
I didn't compare CarMax, but Carvana is what I showed you. Now, okay, there might be apples and oranges here because these are auction. This is primarily an auction, whereas CarMax is a dealer, right?
A used car dealer, but you can buy them online also, I think.
Yes. Well, and how does Copart compare to CarMax?
Yeah.
Well, I'm not sure.
I don't think they're competitors. They're in different areas of the car sales.
Oh, both are used car sales. Yeah.
Yeah, but Copart does auction, is works as an intermediary between auction and.
So Copart doesn't have any showrooms, I guess, right?
No. Well, okay. That area is growing. I did mention that area is growing. That Copart is buying cars and selling them and pocketing the difference. Now, I don't know about showrooms, but they're probably made available through the auction. The bidding system. It's the application.
Okay.
I also brought over Ron. He showed us his PowerPoint. He has a comment about the projection of a pre-tax profit, looking pre-tax profit. Ron, can you provide your comment about?
Yeah, can you go back? I'm unmuted. Can everybody hear me?
Yes.
Yeah.
Yeah, can you go back to Copart for a second, or Carvana?
The value line?
Things. Yes. So take a look at Carvana, right? Look at that. The deficit, $6.55, $3.20. That's in their cash flow. In their earnings, deficit $8, $5, and they're only going to make 50 cents over the next 3 to 5 years, right? You're looking at 50 cents.
Where are you seeing? Can you
look at the third line in the first box on the right hand side. Yes. See how it's 50 cents right there? That's going to be in 2025, 2027. Now take a look at what they say, the third box on your left hand side. They say that this is going to be a $60 stock, right? On the low end. Yeah. Look at that. Can you imagine what that PE is going to be like? 50 cents, and it has to go for $60 a share in the next couple of years. Right now, they don't even have a PE ratio, and you're paying $18 for Carvana. You see that? And your net profit margin, which is the 1, 2, 3, 4, 5, 6, the 7th box on the right-hand side, your net profit margin is 3 pennies. If you go down to the 7th box on the right-hand side, look at your net profit margin. That means for every $100 that they do in sales, no, down some more, all the way down to net profit margin. It's the 7th box. Go down right, one more down. Yeah, right there. One next box, the margin. One below that.
Here, sorry. Yeah, thank you.
So look at that. For every $100 worth of sales, they're gonna make 3 pennies. 3 pennies. Is that the type of company you want? Your return on total capital is 3.5%. That's in the outbox.
Okay, this is Carvana.
Correct. So I'm just giving an example, right, for the industry. Now let's go back to Copart. I'm looking at the stability because, you know, we're hitting a tsunami here in the next 5 years, right? So I'm looking at companies that are going to be at the Rock of Gibraltar in my portfolio. So they have to better show me some good profit. They better show me some good PEs. and they better be in the buy range. And if you take a look at Carvana and you take a look at the net profit margin, which goes all the way in the $7 again, the net profit margins are above the 25% in the last 5 years. You see that? That tells me it's an established company. Right now, in the tsunami environment that we're in, I want to buy SWAN companies. SWAN means sleep well at night, right? And so this stock goes, if you bring it up, it goes to $110. You guys see that right there? So there is no upside potential for the low price in this projection. You see, you still want to have growth companies, but you want to have steady companies, right? So even though this is a great company, I would put that company right here on my watch list by just looking at some of these numbers. And I'm just looking at a few numbers. It is a great company, but the price you pay has a profound effect on your rate of return. So if I take that $102, that was the low price in 2022, and I subtract $30, I would start looking at it when it's at $70 a share.
So the bottom line is a patience, waiting for the price to get dropped.
Correct. So you got to be patient. Let it come to you. Just let the price come to you. And if not, it's okay. You know, I just finished my own investment club meeting, and we did buy stocks today. Matter of fact, we bought three companies today because it was the Rock of Gibraltar. It was undervalued, there's low PE ratios, a great balance sheet, and a future cash flow that is just normal. It is so good. And those two companies were Visa and Google.
Okay. Oh, can you go down further down on that value line report? Down on the right. Keep going. Yeah, keep going. Okay, so there's the company strength A, stock price stability 70, price growth persistence. So it's a pretty good company overall.
Wait, what are you looking at?
Right here at
Yeah.
the
Oh,
bottom
gotcha.
square, the box right at the bottom. No, right at the bottom on the right. That's it. They give them their just general, strength analysis.
Right, but what you have to do in this time period, you have to be very, very selective in what you buy, right? The two companies that we bought, we bought some more Google under 100, and we bought Visa. If you take a look at the financial strength, the Google's A++, stock price stability, 90 out of 100, price growth persistence, 100, earnings predictability was at 95 or 90 over 100. So those are the kind of companies you're looking at.
Okay, but
financial strength of A is excellent, right? Anything about B is good.
He's good. Yeah.
So my suggestion is the price that you want to pay it at.
Yeah. The PE is very high right now.
Correct.
And you don't know exactly what's going to happen with sales going forward and earnings. And so it's a good company. I would just wait.
Put it on the watch list there. And if you go back to your SSG, if I might just interject.
I should probably go pretty soon here. We got 1 by 7. So
let me show you. So if you look at the preferred procedure, right? If you click on the preferred procedure on the right hand side on the bottom, all the way by earnings, preferred procedure in the front page.
Oh, front page.
Front page, yeah. And go to where you make your earnings select.
Second box.
Click on that one for a second. Now take a look at your, are we still on Copart? Is this Copart?
Yes, this is Copart.
Okay, so take a look at on the right hand side where it says pre-tax profit margin, right? Go down, yeah, click on that one. And you can see it's 38, right? And so this is where you really have to watch. So at 36, they're conservative. Okay, because I make my projection based on the next quarter or the quarter after that. And if they've gone down, then I will adjust my default position from 36 to maybe 34 if I don't feel that great about it. And then I fill out the rest of it. And then it will tell me exactly what my earnings per share are going to be. And that's the number that I use. So
you want me to put 34 here?
Yeah, put on 34. Be a little bit conservative, and then the taxes. You can leave that at 18 points. Click on the taxes on the right-hand side on the blue tab. Yeah, let's go down the thing. 18 points. So we're okay with that. It's higher, right? So we always want to be more conservative and paying higher taxes as conservative on our projection side, right? And so we take a look at the shares outstanding. If it's still 240, let's take a look at it. Are they buying back 241? I would put 241.2 in there. Right, and then I'll update my study. And the preferred procedure such as 5.8. You came up with a 5 or whatever it is.
Did you put in the taxes?
4.
Did you put in the taxes at 18?
18.7. That was 34. Yeah, let's make it 34. Yeah. And then put on your shares outstanding.
240, 242, 241.
See, 1.5. That's what I go with.
Really?
Because now you have a preferred procedure, right? You don't have to be conservative. They don't always have to be in the buy zone. It's just because, are you really picking the best of the best? What you're doing is you're just looking at how much is this company going to be worth for me 5 years from now, which is based on your earnings. And that's why that pre-tax profit margin, that preferred procedure is so important. A lot of people ignore it, but it is very, very important because now you customize this.
We have to move on. We have to move on because we're really trying to adhere to our timing, but we really appreciate your input. That's awesome. Okay, John, are you ready?
Yes. Feel free to switch over to me.
Do I need to do anything?
No, we're going to make John the presenter.
Okay, this is IAA. It's Insurance Auto Auctions is the name of it. Here's, I'll hover over this for a second here. But it's a pure play auto auction company. Similar, they take in the damaged, low value, total loss vehicles. Like Copart is a pure play auto auction company. This is a pure play auto auction company. That's the main reason we chose IAA as a competitor to Copart, to compare. And there'll be some value in my slides, I feel like, because I'll talk about the industry. I'll show some stuff in the industry from their financial reports, But I did want to highlight this at first. I'm here on the SSG at first because I want to highlight this. They have high debt. They still have high debt, and their return on equity is wonky because their debt is so high. So that means their equity is low or negative. So that's why this return equity looks like it's terrible and horrible and then really good because there's not much equity in the denominator of that return equity calculation. So that's why that's so weird. And that's why spoiler alert, I wouldn't really recommend this company because of the debt, honestly, right here at 87.7%. Not sure what it is exactly right now. I could look at the 10Q, but it's probably still pretty high. I want to skip, here's the first cup, and I want to skip to this one, how to make money. This should be familiar to everyone based on what we've already heard. They connect the buyers and the sellers in the vehicles that are total loss, damage, low value. These are their buyers. Insurance companies, dealerships, fleet and lease cargo from organizations. And they provide services to both the buyers and the sellers. 2/3 of the revenue comes from the vehicle buyers. They charge fees, and I'll show some slides later on from them that show how they make money. And they also charge 1/3 of the revenue comes from the vehicle suppliers or sellers. And so that's that. I want to go up here and kind of show you this answer to this prompt to this question. So their sales figures are actually okay. I thought they seemed fine to me. That's what this paragraph encompasses. The last year, they did really well in the last year. I think the, what's it called? The COVID lessening and people going out and spending all their money kind of benefited them. So that helped them a lot. But their debt, as I said before, when I started, is very high. And really, I don't know. I mean, it's juiced the returns, but it's too high for me. So that's what that is. I gave sales growth of 4%. I had it higher, but then in our group meetings, Joel's sales growth figure kind of sobered me a little bit and made me reduce mine because I didn't think this industry maybe had as high as growth as we thought. But I thought it should have been a little bit higher, but I acquiesced to the will of the group and lowered it down a little bit. There's not much. I wasn't able to gather much here. It wasn't covered by value line. Didn't see any. I never see any forecast with the management 10Q or 10K. But as Joel said, that they're a duopoly. I believe IA is the other company in this duopoly, which means monopoly with two companies. Duopoly. They control 80% of the market. I believe Car was listed there, but correct me if I'm wrong, Hanny or Joel, but I think Car, I think you did say they sold their auto auction part to Carvana. So they're not really a pure play. They were never a pure play. They had all sorts of other stuff they did, but they do. But these are the pure plays that I can see so far. And I just used the preferred procedure for that, 2.9%. We'll see that on the SSG. So I'll go over that right now. And check out 15 and 16. There's not much time frame. There's some results, but they actually were spun off by, I forget the company name. I'm sorry, but I forget the company. They were spun off by the company in I think in 2018. But they still have some results from prior years. They inserted in there. But so I took these out and lowered it down a little bit for all of them. But I told you about this already. I don't want to repeat myself there. So we took out 2 of the only 3 years worth. See, this is where you can see that it was spun off on this year because there's no price to earnings ratio back then, prior years. So took out these 2 and got the 27. I picked 27, and this low price is 80%. Let me see, back up here. Yeah, 80% of the current price. That went up. The price has gone up with the market being illogical and going up recently. So 80% of the current price. So I would even lower this rule of thumb to, I know it's the rule of thumb that we use. In my opinion, I would lower this for every company, 75 or 70%, because of as long as inflation is hot, Jerome Powell will raise interest rates by 75 basis points per month, and that's going to lower the market overall, is my opinion. So I would say 70 or 75 would be better, but at 80%, this is what it is. And it has this rosy upside downside ratio, but I don't really like that. Like the company, rather. I like the upside downside ratio, sure, but 50% compounding return, 12% with using the average PE. So like I said, that part looks good, but not so sure about all the rest, this debt. The main thing here. Here's my decision, and then I'll show the slides which pertain to the industry as a whole, really. So they can help augment for a Copart and for this company if you're interested in this company. But that's pretty short and sweet. But they look like they have the duopoly. I like duopolies when I'm trying to own the company, but their debt is just too high for me. So let's go to the slides, and I'll start at SIA, and I'll start here. So this is just a little overview, and this should apply, like I said, most of this stuff should apply. I'm sure they're competitors. I'm sure a lot of this applies to Copart as well. This is some of the stuff that they have, digital auctions. This is what they provide. This is in their, obviously in their financial, glossy financial report that they provide to shareholders. And this is a basic granular way of how it actually works, The seller transportation via the company, IAA. They arrive at this location where they house them, they're consigned, and then there's digital bidding, and then it's sold and transportation via the buyer to the buyer. So pretty simple, but here's a good slide because it talks about, here's their sellers, their customers on the selling side, the customers on the buying side, and this is the services they provide to the buyers and the sellers. And they get a fee right here and right here from the seller and the buyer, and they have this marketplace digital, and they kind of facilitate transaction. They do a little bit more than eBay because they house these cars and consignment, but this is how they can grow. sure Copart's utilizing similar methods to grow. And that was short and sweet, but that's pretty much all I got. Any question on that? Or we can also open it up to the industry and go back to Copart, whatever you guys want to do. We got about 5 minutes left before we want to go to the guests.
You should show slide number 22 about those financial ratios, and you can see that Copart. No, the same. Just the next slide, number 22. Right now you're on number 21. John?
Is he there?
I don't know.
John? Do you have the it up?
Let me see.
I'll make you presenter.
Yes, I do.
Okay, I'm making you presenter.
Oh, wait, do I? Okay. Yes, I do.
I have a comment on John.
Go ahead. Ready. I don't know what happened to.
I'm not sure of the auction companies, but all the car companies like Avis and Hertz, their loan ratio is very high, 200, 300%, 500%.
Who is this?
It's red.
Oh,
What does that mean, loan ratio?
Loan ratio to market cap is some 200, 300, 400%. So these car companies, which own most of the car, their assets are owned by the bank, and their loan is very high, or debt ratio, I mean.
Yeah.
So that's this is 87% is not a big concern, because they cannot afford to buy all the cars in their lot. They are financed by the banks.
So what's Copart's debt?
I think
It's very low.
John is 87%.
2.5. They dropped
There's
it.
an anomaly.
2.5 is the 2022. I try to, yeah, I have not, sorry, I should have studied, try to understand what happened. So you can see year after year, the decreasing. You know, Hoy mentioned about they also have a real estate development, right? They also buy land.
That's correct.
I think they have a lot of cash. Do they have a lot of cash? I'm wondering if 2022 is they pay off.
They have roughly 2.6 billion in liquidity, 0.4 billion in cash, and 1.2 in revolving credit. And essentially the revolving credit has not been used that much. They retired about 400 million of private placement notes, and they paid a prepayment penalty for doing that, but with almost 17 million, but it's roughly 1 year's worth of interest payments if the notes had not been retired.
We have 2 more minutes for the stock study.
Okay, so just want to show the financials for these two companies. No brainer that as you can see, you know, Copart hit all the marker, you know, the criterias. So are we able to do like what's called limit order?
Oh, I don't think so. I mean, Reddy, you just do that manually, right?
What?
Purchase the stock. Yeah, there's no such thing because Jay, we're not actually buying stock. We're just watching it, and Reddy is entering it into the system for the price of that day. So I guess we could do your own limit order.
Right, or we can say, hey, if this stock went down to 90, we can do a vote, say if this went down to 90, let's buy it, something like that, right?
Okay.
So, yeah, okay, all right.
I think this is a fictitious stock. I don't know if we can put a limit order. I'm not sure.
No, as we can, but it's just Joanne just explained that everything is a manual.
Yes.
So we basically, as a club, we can say, we can vote on, say, when the stock dropped to $90, so 95, whatever the motion is.
We'd have to watch it. Yeah.
Yeah.
Yeah,
we
but
have
who's
to
gonna
watch.
watch it, and then when does it expire?
Oh,
Reddy's
yeah.
gonna have
Oh,
to
that's another
continually
thing.
monitor
Yeah,
it.
add it to the motion.
Right.
Reddy will watch it.
Okay. All right. Should we open our
Well, you don't need to watch it sort of manually. If anyone has a brokerage account, you can set alerts, and when the stock price goes to a certain point, you get an email that says it's hit the alert.
oh, that's
And
Oh yeah, that's
there's a number of like even I think some of the like Yahoo Finance or something like that. There's a bunch of websites where you can do this.
okay.
The other thing to do is if people want to do this in their own personal accounts, but this is a little bit sort of tricky. But you sell puts at the price that you want, and so you actually get paid to wait for the stock to drop to your price. But if Ron was saying $70 from 110, so $40 is you won't collect a lot. But you still get something. So if you sold a put expiring in a month at $70, I don't know. I can look up while we're talking. I can look
Okay.
the.
Let's go to the audience, and so right now we have the open mic for guests, questions and comments. Maybe we should start with Ron since he's already. Ron, are you yourself muted? Hi, Ron.
Yeah. Hi. I think it's excellent the way that you guys look at it, the way you present your stocks. I think it's excellent.
Okay. I think that's ready.
Somebody's.
I'm going to mute him. Okay.
Oh. So yeah, I think it's excellent. That's it. The only thing I was going to bring up is make sure when you do your preferred procedures on them, that gives you another look of making an adjustment and being your own analyst, and that way you go from the low all the way to the high, right? And using the preferred procedure, finding out what the historical preferred procedure percentage is, and make that adjustment like we did today, that you can see that would be your lowest, and what the analysts were saying, you can say that's your highest, and then you can take your pick, because now you have options and a choice of what direction you want to go.
Sounds good. Okay. Thank you.
You're welcome.
So do you guys want me to go through the attendees? I'll just unmute them, and John, you can. So it's Anitra. I'm unmuting her.
Oh,
John.
John.
One more item for Jay. I sent you a PowerPoint on ROIC today, and a couple members. So it's really a good one. It teaches you the ROIC.
Okay.
I shared it already, Jay.
Oh, okay.
Thank you, Ron.
Thank you. Yeah.
Okay.
Hi, Joanne. I had a technical issue. I'm back now, but
okay.
I'm a panelist. I'm not an organizer, so I can't see the people that are here.
Oh, okay.
Can you
got it? That's easy. Yes. Done.
Okay. Anitra, you're self-muted. If you want to give us a hi, Anitra.
I enjoyed the meeting. I love your meetings also, always, because I'm learning something. I'm taking notes. You mentioned the preferred procedure video from Cy Lynch. Was that something recent or something a year ago? Because I looked in the Better Investing learning library, and now what I saw was 2021, but I think there was something done recently.
Actually, that was from 2021. It was 2021. Oh, good. Yeah.
Okay.
I don't know if she has the most recent one, but yeah, that was 2021.
Okay, and so that was, I was hoping if that wasn't it, that you would put it at the library. And I'm going to go over that again. It was, I liked what you guys said about the two companies, and you said that they were a cohort, or I mean, something where the, no, duo something.
Duopoly.
Duopoly. Okay. All right. I'm gonna look that up. And what else? I just really like the information that you guys went over, and I'm learning and I'm taking notes, and I I like the fact that you use Google Docs. I'm not familiar with it, but I think I'm going to try that because it seems like it's easy to share among partners. So,
Yes.
all right, thank
When are
you.
you going to join us, Anitra?
I am considering. That's why I have to learn these things. I don't want to come in as a weight. I want to come in learning as much as I can ahead of time.
Learning does not stop. Learning does not mean you stop learning and you join us. We learn together.
Okay. All right, but I'm considering it. But thank
Okay.
you.
Thank you,
Sounds good.
Anitra. Evangelia?
She's offline.
Oh, she's offline. Jimmy. Hi.
Yes, I've enjoyed the meeting. I'm relatively new at this, so everything sounded good.
Okay, thanks. Are you a Better Investing member?
Yes,
And do you belong to a club already?
not currently.
Okay, but you've been a club member before?
Yes,
Oh, good. That's great. Well, welcome back.
thank you.
Okay. So do you have any questions or comments?
Not at this time.
All right. Thank you, Jimmy. Kirsty
Thank you.
or Christy.
Okay, yes, I, enjoy your presentations, but I wouldn't buy either one of the stocks right now.
No. Good advice. Do you have any questions?
No, not at this time, thank you.
Okay. And do you belong to are you a Better Investing member?
I'm a Better Investing member. I belong to a club here in Jacksonville, Florida.
Oh, you do? Okay. Well, welcome. Thank you.
Thank you.
Okay. So I guess we can move on. Do you want to do,
What's next?
well,
Business?
if there's any motions?
Well, we should probably discuss, I feel like we should discuss Matt if he's leaving
Oh,
and
yeah.
how to handle his departure, his whatever they call it,
Yeah, his payout.
payout. Yeah, payout.
Let's follow up with Mina. I thought Mina's going to follow up with him
Okay.
to confirm.
Okay. If he's just on a
Just
hiatus
withdraw.
or if he really wants to withdraw.
Yes.
Okay.
Yeah.
Okay. Well, that's the case. That's done then.
Okay. And are there any motions for buying or selling?
Do we have any money? We don't know.
We have about 3,200 or so. I think Grady can confirm, or we can look at his report. But
yes,
yeah,
Isn't that if we don't have to pay Matt out?
Yeah.
Yeah. It'd be nice to clarify that first. Yeah.
And
also, like Vertex is it's become quite large. It looked like 20-something% of the portfolio.
It is.
So that might be an opportunity maybe to trim back. If someone is leaving, then we could maybe sell some of the Vertex.
Yes. Matt's been here for a long time. He's got a lot of shares, built in. So we may have to trim. I don't know. Maybe Vertex would be enough. I don't know.
Agree. I think we should,
maybe.
We should trim Vertex after our next month's quarterly report evaluation.
Oh yeah.
Oh yeah.
Yeah, it's wait.
Who follows Vertex?
I do.
Isla? Oh, okay,
Hi.
Jean. Okay.
Hi, Jane.
Hi, Henry. So nice to have you back.
Thank you. Nice to hear your voice.
Okay, so there's no motions then?
Okay.
So no motion. So John, Jay, Mina, and I met for an executive meeting, and we went over our accomplishments or what we've done so far, and we're really a little bit behind on our stock studies. I think we only did Is this our fourth one this year? So
Mhm.
I know.
Not even for two a portfolio review, not even
Oh yeah,
considered
you're
stuff.
right.
Yeah.
So Megumi, I know you have a real time restrictions. Are you available to do a stock study? You know, can you give us a date that might be good for you?
Yeah, I said January.
January. Okay, good. January. All
Yeah,
right.
so I
That's
think I'm
awesome.
signed up for something in yeah, education topic in January.
Well,
So
how about a stock study?
Yes.
where's the schedule for that? I don't see it.
It's right. Do you see it?
It's not up yet. Yeah, it's not up. But for
Not up.
2023, is that up?
Oh, 2023. Okay. Yeah.
Yeah, if you get that up, I will sign up for one. But I
Okay.
just can't commit next 2 months.
Okay. All right.
Yeah.
I'm available to do a stock study.
Okay. Awesome. Yeah, we need to do a few more stock studies. We've been doing great on the education topics. Thank you, everybody. You really stepped up on that. I know, and then we've had turnover that we've had to deal with. So shifting around of stocks. So I think everybody's assigned a stock right now, right? Is there anybody that doesn't have a stock? Or anybody that has two stocks? And ready? I adjusted I added Hanny to my iClub, so you should be able to add money for him. Oh, wait a second. I think I muted Ready. Okay. I unmuted you, Ready, because your phone was going off or something. Something was dinging on your side.
Say that again, John.
I added Hanny to my iClub so you can deposit money for him.
Okay.
Yeah.
Okay.
Okay.
I'll do that.
Okay. Well, John had asked me to try to be the timer for our meetings, and guess what? I think we're finishing before the times ended.
That's never happened.
I know that's never. So we have.
That's an accomplishment. You can write it down.
Okay. Yeah. Right.
Ron's comments are great. I think we should allow him to speak a little bit longer.
Oh yeah. Yeah, that's great. Yeah.
That's good.
What was the comment?
Allow the guests to speak, especially when they give very productive comments.
Okay, Ron, right now you have 15 minutes to talk.
No, he doesn't have 50.
No, I need an hour.
Wait. No, our meeting ends what? 7:30?
7:30. Yeah.
That's why I say he has 15 minutes.
Okay. All right. Okay.
This club is such a nice club. It is open, it is friendly, and you guys are here to learn. And then you can use all this information in your own portfolio. And this is what it's all about. It's the camaraderie and the sharing of knowledge and wisdom, and then putting into practice, and then finding out there is no one right way. As you notice, just in your evaluation of your earnings, right? Yeah. You can go 3%, 4%, 5%. You don't know whether you're right or wrong. You're within the ballpark. And then 5 years from now, you say, yes, I was in the ballpark. And so it's not precise. And so don't be so hard on yourself. And you're going to make mistakes. If you pick the 5 stocks like BetterInvesting says, and 3 of them are going to do all right, you're going to beat all the fund managers out there.
Ron?
Yes.
Ron, the 2 companies that John presented, right? Copart and IAA, the duopoly, right? I looked at them for their, I think the objection for IAA was the large debt. I looked at the interest coverage, and they can cover their interest payments 6 times over. Their current ratio is like 1.69. Their quick ratio is like 1 point something. So, their debt is not a huge problem, but the price is nice for IAA. It's just $35. Copart, they can cover their interest payments 9 times, and their current ratio, quick ratio, are above 2, right? Or like they're 4 and 3, something like that. but the price is $100 and what is it, $30 or something. So the question is, how do you determine the price that you're going to pay? So what's your rule of thumb?
So Warren Buffett, he takes a look at the fundamentals of the company.
Yeah.
And he really doesn't look at price, because a $5 stock could be way overpriced, and a $300,000 Berkshire Hathaway could be undervalued. So when I look at these companies, I look at, are they fairly valued, overvalued, or undervalued, right? And then I throw a margin of safety in there because of what the Federal Reserve is doing, the war in Ukraine, right?
Yeah.
And so I'm going to take a look at companies. See, this, what you're looking at, is good study material. And there is no good one or better one. There's no company that's 100% perfect. When you take a look at the Copart, you look at those 10 financial ratios, right? Percentage. And then you go put IAA on there, whatever the other company is, and see on your checklist which one has the most green ones on there. And then you're looking, that's the quality of the company you're looking at.
Yeah.
Well, yeah, we were going to go over those ratios.
Correct. And then
the price that you said is too high. So what's your rule of thumb?
Well, what happens is this, okay? I'm going to go sidetrack it a little bit, because I want you guys to understand something. The SSG is based on a projection that's on today's prices, right? But what happened in 10 years, the market was so exuberant that all those prices were already way too high to start out with. Now you're making your projections from all these high zones. Even the low price is in the high zone, if you take a look at the rest of those last 10 years, right? And so you have to understand and say, do I have to step outside the box this time and see what is the market really going to tell me in the next 5 years? So what I do is I make a projection, not from this year. I make a projection from the year 2024, 2 or 3 years from now. Then I go make my 5-year projection from there. And then instead of doing it today, I can say, is it really going to make the money between now and the next 3 years? Because I'm going to base my projection 3 years from now. And if I think that the market, because the market is actually supposed to turn around for another 18 to 24 months, so it's going to go down maybe another 10, 15%. It's already way down. And that's when I make my projection from that point on going forward.
Okay.
And that way I have a margin of safety.
Okay, so for now, because we're on the edge of a precipice, right? You wouldn't project anything.
Are we at the edge already, or do we still have more to go?
Don't know.
Well, yeah. Well, what they're saying is that the next, the second quarter of next year, everything will just kind of go down. Right?
Okay.
Because CPI just came in at 8.1%, much higher than they were projecting. They thought that the measures that the Fed has already put in place, it would have started showing up in an effect. But the only effect is that it went down 0.4%. So it went from 8.5 a couple of months ago to 8.1, even though we've had 2 raises of 0.75 basis points.
Right.
The American jobless rate is like 3.4. Like historically, it should be about 6, 5. Now it's 3.4. The American economy is chugging along really quickly. So interest rates are going to keep going up.
That depends on whose numbers you believe in. I still think that the unstable situation that we're in right now, yes, the market has gone down a lot. But if you take your projections and you say it's going to go down another 20%, and then make your projection from there, from that point on going forward, I think you can sleep better at night. You don't have to make the money today. Your club is going to be in existence for the next 10, 15, 20 years. And so your portfolio is going to be in existence until you die and your next generation takes over. And so everybody wants to make the money the first year, the second year. So you have to really think long term in this time period. And so what I would do is I would say if it goes down another 20%, which it could happen in the next 18 months, let's make our projections from there going forward and still be conservative. And I just showed you the preferred procedure, which you can do. And now you have a range from 1.5% going forward to 4% to what was it, 5.5%. Now you can take your pick, but you have an awareness of why you make the projection based on your research. So just be conservative. You know, you're gonna do all right. This club is gonna do all right. You got good companies and you got good people in here. I mean, the quality of research that was presented today was excellent, excellent.
I have one comment on that.
Go ahead.
The value line is generally conservative projections. So we have to be more conservative than value line.
Yes, I would be, because suppose you're very conservative, right? And it hits your goal, and value line says no, that was too conservative. It hits more, it goes higher. Isn't that more icing on the cake? You know, at least on your high price, that's the minimum you're gonna get on your high price. If value line and Morningstar says that's more, your high price was already acceptable to you at that price. Anything above that is icing on the cake. Does that make sense?
Their high and low price 5 years from now has a good range.
But do you know that that is based on today's opinion, correct?
Well, all the projections are based on today and last 5-10 years.
Correct. And so you know that in the last 10 years, we were in a bull market that was higher than it was in the last 200 years before that, right? So you need to tone it down, bring it down. And if it creates more upside for you, icing on the cake. But you know exactly what it's going to be that you're acceptable with.
But on the other hand, if we are too conservative, we may miss good companies, good opportunities.
That's okay. That's okay. You're not going to get all the companies. How many people missed out on Google and on Amazon and Microsoft, and it was going for $80 a share? It went all the way up to $200, $2,000 a share. It's okay. You're not going to get all of them. You're not meant to get all of them. You just pick quality companies. You pick 5-10 companies in your portfolio, and then you watch it like a hawk. We sold 2 companies today in my club, right? I don't want to talk about my club because it's a different thing, but we sold 2 companies, and with that we bought stronger companies so that our portfolio has a rock solid foundation. Matter of fact, we sold PayPal. I'll tell you what we sold. We sold PayPal and we sold AMD, two good companies that we had. And we changed that around because Google and Visa were better companies. Visa, I sent a PowerPoint last month on Visa. Visa does 65,000 transactions per second, and another bank. They get that 1-2% on every transaction worldwide, and they don't take the losses if the people don't make the payments. It's a strict toll booth, just like Costco, but Costco has inventory. Visa doesn't. Visa is one of the great companies you can own.
Hey, Isla, I heard it.
Are they at a good price right now? Still?
Who is? Visa?
Visa.
Yes, Visa is still a good price.
We had a Visa in our club. I don't know what happened, why we sold it. Jean, when you joined us, remember you did the study. I don't remember why we sold it.
Take a look at that PowerPoint that I sent you, because I put the 10 financial bullet points of Bakul in there. And you will understand that there's certain companies that you keep in your portfolio that you're never going to sell, and you're going to add on to it. And you know, these are great companies, and you just watch it. And then when you look at Copart and so on, that's more for me to study other companies. How do they function? you want to take a look at their operation. Does that operation bring money down to the bottom line with the minimum amount of cost, with the best management you can get, right? Because when you look at a company, there's three things that happen. There's money that comes in, there's money that goes out, right? Money comes in the sales, money that goes out to pay all the bills. Then there's money left over inside the company. What is management doing with that money? Is a good capital allocation? Is that how they make their money? Right? Is the company a good producer of profit? That's another way of looking at it. And so you break it down to very simple metrics that you can follow.
Hello?
But you guys have a good group. You got good people. I look at the names up here, and I mean, I'm just really astounded with the names that, Isla is excellent. I hear her make comments, and Joanne Obata. I mean, I've never met her, but I can just tell the confidence in her voice. Megumi, excellent people. I mean, all of them are excellent up here.
Well, my personal portfolio is not doing great, I have to say.
Nobody's portfolio
You're not
is
alone.
great.
Just, yeah,
You're not the
everybody.
only one. But remember what Warren Buffett said, right? If you cannot handle your portfolio dropping by 50%, because it shouldn't be your shopping money, right?
Yeah.
Then you should not be in the market. Berkshire Hathaway itself dropped by over 50% twice in their history. So today I was a little surprised when Jay Eagleson said, are we going to buy some stocks? And everybody was quiet. Everything is on sale. Start buying. Even if you buy 5 shares, go buy 5 shares. You're never going to buy at the bottom, but if they're on sale, go buy 5 shares. Add on to your portfolio that you already have, and then start looking at those companies. Can I trade it for a better company? Amazon, I'm going to close it up here, but Amazon last week hit 106. And 107 was the top of my buy range. And so, boom, I got in at 106. Today it's 113, right? But always remember the price you pay. You're never going to get to the bottom, but 106 for Amazon, I think it was excellent. The only thing I don't like about Amazon is that the PE ratio is so high, but the price was good.
Okay, we have 3 minutes, Ron. Thank you very much for
You're welcome.
contributions. I think you energize our club.
Yes, energize Bonnie. Isla, I heard your club owns a Copart. Do you have anything to add?
Well, we don't actually own it. We looked at it.
Oh.
And we sort of delayed doing anything about it at our last meeting. We may take it up again at our meeting this month. But we did like it. We liked it very much.
Just like us.
My only question about it when I was thinking about it earlier last week actually was that I'm wondering if the strong US dollar, since Copart does a lot of business overseas, sells cars overseas, I'm wondering if the strong US dollar will be somewhat of a deterrent to sales of those cars overseas.
Yeah, sure.
Yeah.
I mean, it's just a question. I don't really know. I just think there might be some deterrent to having those cars sell as well as they have been in the past overseas, just because the dollar is so strong and it will cost so much more for people to buy them.
I think you're right. I've been reading about how the dollar being on par with the euro is really creating some issues for American companies.
Yeah, it does. I think it it's great for us, but it's not great for other people doing business with us. So I just wonder about that.
Yeah.
It isn't. I don't think it's a deterrent to buying the company. It's just something to keep in mind.
Good point. Good point. Okay. Well, 7:29, guys. Thank you.
Oh.
All right. Goodbye, everybody.
Ron.
Nice meeting.
Okay. Great meeting.
Bye.
Great meeting.
Bye.
Bye.
On time. 1 minute.
Okay. What
Big accomplishment.
do we have for next month?
Oh.
Is John
There's a quarterly report.
Can you scroll to the top? know. Who has the screen?
Who has screen? You or me?
Yeah.
Am I presenting?
Scroll to the top.
Scroll to, oh.
Okay, so next is Isla. You're doing this. Oh, did Isla leave? Oh, you got Isla's doing this.
Yeah, I'm here.
Informer.
Small cap informer next month. Yes.
Okay, and then I think we have quarterly reports. So
Yeah, we do.
everybody
Yeah.
be prepared to do your quarterly
How
report.
do I look at this? Quarter reports, I lost.
What? They're not quarterly reports aren't on there, but
Oh, okay, okay.
okay. All right. Thanks, Kat. 7:30. I'm gonna stop the recording.
Yay.
Everyone, we went over. We just stop on time.